Happy Thursday, everybody. Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's #2 economy. My name is Tony. Let's jump in. And we begin as we usually do with the economy. China is ramping up scrutiny over outbound investments by domestic firms and their use of proceeds from Hong Kong share sales, following record capital outflows that have put pressure on the currency. US-based Bloomberg, in a report citing unnamed sources, writes that the State Administration of Foreign Exchange, SAFE, has instructed China-based companies seeking initial public offerings, IPOs, or secondary share sales in Hong Kong to secure a no objection indication before deploying funds overseas. Companies failing to do so must repatriate their proceeds to mainland China. In addition, regulators are intensifying their examination of offshore money transfers under the guise of overseas direct investment, amid suspicions that some firms are using such transactions to move capital out of China. Concerns have heightened after a record $168 billion in investment outflows last year. The move aligns with broader efforts to stabilize the currency, China's yuan, which has faced depreciation pressures due to slowing economic growth and lower domestic interest rates compared to the US. Analysts warn that additional strain on the currency may arise if the US-China trade and investment war deepens, which it looks like it will. On this development, veteran China analyst Bill Bishop observed yesterday, quote, "Authorities are raising scrutiny of outflows via Hong Kong listings, foreign deals. They would only do that if they are more concerned about capital leaving the country than they have let on publicly." End quote. Meanwhile, China is set to inject fresh capital into 3 of its largest banks in the coming months, reinforcing a stimulus package designed to stabilize its struggling economy. Several outlets, citing unnamed sources, write that the Agricultural Bank of China Limited, Bank of Communications Co., and Postal Savings Bank of China, 3 of China's largest state-run banks, will receive at least 400 billion yuan, $55 billion, in fresh capital. The recapitalization process could be completed by the end of June, though final allocations for each bank are still being determined. The initiative aligns with Chinese banking regulators' previous announcements of plans to replenish core Tier 1 capital for the country's 6 largest state lenders. To finance the capital injections, the Ministry of Finance will issue special sovereign bonds, bolstering banks' resilience against financial risks while enabling increased lending activity. China's banking sector could receive as much as 1 trillion yuan in total, with additional funding secured from new sovereign debt issuance. This move underscores Beijing's commitment to strengthening its shaken financial system. As we've discussed in previous videos, recent stimulus measures, including mortgage rate reductions and policy rate cuts, which have proved largely ineffective, have placed significant pressure on banks' profit margins. Institutions such as Agricultural Bank and Postal Savings Bank are now contending with record low margins, declining profitability, and an uptick in bad debt. Traditionally, Chinese banks have relied on retained earnings to reinforce capital reserves, with some also leveraging debt issuance in the bond market to capitalize on lower interest rates. However, this upcoming capital injection represents the first such government-led move since the 2008 global financial crisis. And when we look past the major banks too, we see a much more concerning picture. Speaking on this development, Peking University Professor of Finance Michael Pettis observed today, quote, "While China's biggest banks certainly have balance sheet problems, the worst problems by far are in the smaller regional banks. But while for nearly 3 decades the credit allocation decision in China had migrated from the big Beijing banks to local banks, in the past few years we have seen a reversal of this trend. The fact that the large Beijing banks have gotten nearly all the recapitalization funding suggests this re-centralization process is likely to accelerate." End quote. Now, before we move to the next development, if you're getting some value from today's episode of China Update, I have a huge favor to ask, that is just to hit the like button. And if you'd like to see future China analysis like this, maybe consider subscribing. China's recent naval deployment near Australia and New Zealand has raised alarms across the region, highlighting the People's Liberation Army Navy's, PLAN, growing capability to project power far from its shores and underscoring Beijing's strategic intentions. For the first time, a Chinese warship formation has ventured so far south, signaling China's increased focus on military operations beyond its traditional areas of influence. The fleet, composed of a Type 055 large destroyer Zunyi, the Type 054A frigate Hengyang, and the Type 903 replenishment ship Wei Shanhu, recently conducted live-fire drills and complex combat exercises. Chinese state media reported that these maneuvers were designed to enhance the coordination and combat capabilities of the task force. It is difficult to exaggerate how significant this is for Australia especially. This is the first time that a non-friendly nation has conducted unannounced live military operations this close to Sydney since the Empire of Japan during World War II. Australia's Director General of the Office of National Intelligence, Andrew Shearer, described the deployment as a, quote, deliberate provocation, end quote, aimed at shaping Australia's response, adding, quote, our preliminary view is that the deployment demonstrates China's growing capability to project military power into our immediate region, now matched by an increasing intent to do so, end quote. The move follows a pattern of Chinese naval activities in international waters, but makes an unprecedented escalation in proximity to Australian and New Zealand territory. Compounding tensions, the Chinese live-fire exercises caught Australian authorities completely off guard. Air Services Australia CEO Rob Sharp testified that a Virgin Australia pilot, that is a commercial pilot, was the first to alert Australian authorities to the drills after hearing radio communications about the drills during a flight, suggesting a significant and intentional lapse in communication between China and its regional counterparts. The revelation that 49 commercial flights had to be diverted due to the unexpected exercises has fueled criticism of both the Australian government and defence agencies for their handling of the situation. It goes without saying, too, of course, that China doesn't exactly have many fans in Australia this week. The Albanese government, which has been working to stabilise relations with China, has faced scrutiny over whether it downplayed the incident to maintain diplomatic momentum. While trade relations between Australia and China have improved, evidenced by Beijing's resumption of Australian lobster imports, the military posturing near Australian waters indicates that strategic tensions remain unresolved, and indeed will likely deepen. Meanwhile, the smaller regional player of the two, New Zealand, has also been closely monitoring the situation. The country's military collaborated with Australia to track the Chinese flotilla's movements, particularly as it operates within Australia's EEZ, Exclusive Economic Zone. Against this backdrop, New Zealand's Deputy Prime Minister and Foreign Minister Winston Peters is set to visit China, where discussions will likely touch on Beijing's military activities in the region. Chinese commentators have defended the PLAN's actions, stating that such deployments are a normal part of, quote, safeguarding trade and economic interests, end quote, even though literally the only trade and shipping routes that far south are with Australia and New Zealand. Indeed, for Australia and New Zealand, the strategic implications are clear. China's naval reach is expanding, and with it, new security challenges are emerging. For these countries, the traditional great shield of distance is, like so many things in this brave new world, fast becoming yet another relic of the past. In the coming years, policymakers in Canberra and Wellington may well miss the good old days when the biggest threat posed by Beijing was simply being too reliant on their market. Next up, and finally for today, on Tuesday of this week, we did a deep dive into the question of whether the current US administration is pursuing a so-called reverse Nixon strategy vis-a-vis China and Russia. At the time, we cautioned that it is just speculation that such a strategy is being pursued. Now, however, it appears that this has been confirmed. US Secretary of State Marco Rubio, in an interview with US-based Breitbart News, said that the Trump administration is, quote, aiming to peel Russia off of China in much the same way former President Richard Nixon during the Cold War peeled China off the Soviet Union, end quote. Later in the interview, he also expressed, quote, I don't know if we'll be successful completely at peeling them off a relationship with the Chinese. I also don't think having China and Russia at each other's neck is good for global stability because they're both nuclear powers. But I do think we're in a situation now where the Russians have become increasingly dependent on the Chinese, and that's not a good outcome either, if you think about it. End quote. And also, quote, the big story of the 21st century is going to be US-Chinese relations. If Russia becomes a permanent junior partner to China in the long term, now you are talking about two nuclear powers aligned against the United States, and even 10 years from now or 5 years from now, if this trend continues, we could find ourselves in a situation where whether Russia wants to improve its relations with the US or not, they cannot because they've become completely dependent on the Chinese because we have cut them off. I don't know if that is a good outcome for us. End quote. End quote. I think having a situation where the Russians are permanently a junior partner to China, having to do whatever China says to do because they are dependent on them, I do not think that is a good outcome for Russia, and it is not a good outcome for America or for Europe or the world. End quote. I quoted this at length because it is important to understand what the US administration's thinking and strategy is when it comes to Russia and China. So we do take note here of the words of the US Secretary of State, and we continue to follow the space closely. We discussed this reverse Nixon strategy in depth in Tuesday's video. The current concern among Russian and Chinese analysts appears to be that such a strategy would be very difficult for Washington in the current geopolitical landscape to pull off. But we do appear to be living in especially interesting times. So, ultimately, only time will tell. Okay, that is today's episode of China Update. Thank you so much, everybody, for watching. Have a good Thursday, and I will see you all tomorrow.